Good morning and happy Monday, everybody. It's the 18th of December, 2023. It's 8:01 a.m. Chicago time. This is episode number 2592. Derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. Really, not all that much to talk about in terms of drivers today. The overall market sentiment is mixed to slightly positive. You could see across the board in the US, we have the markets up 20 to 40 basis points and down 50 basis points in Europe, offsetting those changes that you see there. The percent changes from settlement, so it might look different than yours. But overall, the posture is mixed. We very often start mixed. This is the most common posture. No key earnings today. The news flow, the themes and trends overall. There's a shipping issue in the Red Sea. The mouth of the Red Sea has Yemen in this constrained area, and it's been attacking shipments it believes are going to Israel. And so many shipping companies have had to use alternative paths, which impacts the delivery of goods. A long-range missile considered an ICBM class missile was fired by North Korea and tracked by Japan over the weekend. I'm not sure what those guys are up to, but we went through this do you guys remember when we went through this? Was it 2000? I don't know, 2017 maybe, 2018? The German IFO came in below expectations, and ECB and Fed speakers that came through overnight are indicating that the markets are getting too far ahead on rate cuts. This is going to be the theme for the central bankers, is that the markets don't get too frothy expecting those or pricing in those rate cuts and making moves accordingly. Also, I think this morning on the Wall Street Journal, I read that the number of participants in the U.S. stock market is at an all-time high. More people are participating in the stock market or investing in stocks than any other time in history. Other than that, not much more to say. This is the final full week of trading for the year. What's ahead of us? We have the NAHB Housing Market Index for December at 10 o'clock. And tonight we have Japan's interest rate decision at 10 p.m. Eastern. I want to bring your attention to the rotations. You could see that the S&P and the Nasdaq remained exactly the same week on week. The RTY is pushed up. The RTY's had some pretty big moves last week. The Dow is down a bit, I think from 28 to 26. And then crude is down from 24 cents to 23 cents. And as far as the expected normal range, the extent, the edge of a normal range, or one standard deviation from the mode of normal range, has stayed firm in the S&P at 58. This number, what this means is we should expect the S&P to move as much as 58 points from its prior settlement and still consider that pretty normal. It doesn't mean that that's what's common. That would be the mode. This is the edge of the first standard deviation, or what we would consider normal, or 1 sigma. And that's what that's indicating. So anything above 58 puts us in the second sigma, which has a very low probability of occurring in the historical data set. The Nasdaq fell, I think, from 238 to 232. The Russell jumped from 33 to 35. The YM moved from 385 to 375, and crude remained at $2.40. The S&P today completely balanced. It is making its move. It's 8 o'clock move, 8 o'clock central move right now. But the overall profile and auction are balanced. The volume is relatively light, as would be expected here this week. Schools are out, and many families have already left for the holidays. So volume's pretty light, not much for the market to price in. Currently, the inventory is 100% long, and the range is 15 points, which is normal. The point of control shifting to 47.79 from about 47.85 on Friday, and so on and so forth. So everything is pretty much normal. We're seeing a pop in crude, and the pop in crude is the result of this this stuff going on in the Middle East right now. But you know, last week I talked about crude probably crossing the 72.50 and pushing higher to retest. And it's doing that, but it's going a little bit farther than expected. The cryptos are still holding these pretty high prices currently. So we'll see how that plays out. But crypto's back in the picture. Let's take a look at what's going on. Here's the S&P. Last Friday's show. This is what I covered. Let me maximize this. This is what I covered in last Friday's show. We talked about a very, very likely sideways trade on Friday, and that's exactly what we got. Here it is. I explained that given this active price discovery profile on Thursday and an active overnight profile on Friday, the expectation is the market will likely rest inside of Thursday's range. Here's what actually happened. There it is. This is Thursday's range right here. This is Friday's range, and inside day continued aggressive price discovery, just as expected. There's nothing dramatic seen on Friday. It was actually a pretty noisy trade. I'm kind of not paying too much attention to the S&P right now. I see a little bit better movement elsewhere. And then currently in the overnight session, you can see this profile is completely Gaussian with the full session VWAP, full session mid within a stone's throw from the overnight point of control, telling us that the market is in balance. So we're coming into a balanced market, slightly higher than Friday's high, but well within Thursday's range. This is a compressing market. I'm expecting today to be more of the same, more gyrating, more sitting sideways near the upper end of the range. What we know from Thursday and Friday's action is that there's no excess. That's what's important for the auction. There's no excess here. We popped higher on Wednesday, FOMC, and then from there we opened higher, which was expected. The auction was incomplete on Wednesday. We opened higher, tested back in the range, closed a little bit below the open, so we put in a red candlestick with an excess high, what looks like an excess high and low on a daily, but the profile itself is not showing any excess. What does this mean? It means that these prices are not being rejected. These prices are not expensive according to the participants who are in this market. They're not moving away from these prices very quickly. And so what we have here is a market that is accepting or is slowly accepting these new prices up here just under the 4,800. And we saw the same on Friday. And here we are opening on top of Friday's range. Very, very likely to open, retest Friday's range, potentially its value area, and then turning up and then taking out this high at 91.75 for a ride to 4,800 and whatever else levels are up there. I don't know what's up there, to be honest. I don't have my price map memorized this morning for this particular product. NQ, same thing. You could see the break higher, opens, digs pretty deep, fills in. The single prints, we talked about this on Friday morning, closed a little bit weaker than it opened, closed a little bit weaker than the prior day settlement. But look at what it did on Friday. It hung out at the high, and now it's opening in the middle of this balanced range. It's not given up. It has not. The biggest clue here is we have not given up these higher prices. And as long as we don't give up these higher prices, as long as we don't form an excess, meaning we go up and we immediately fall. Think of an excess like one of those rockets with a rubber band. You pull it, and you just shoot it up, and it just goes, and then it immediately falls. It doesn't do like the curve rollover. It just goes and it falls. That creates an excess. Essentially, it says to participants that, hey, these prices are very, very advantageous to get out in or to initiate a short in, and they're not going to last, and we're going to push to sell as much as possible at these prices. We're not seeing that. As long as that doesn't occur, what happens with the auction? Fortunately, there's about a 10-second delay here. I can't wait for your answer. Otherwise, we'll just be silent, staring at each other, or you'll be staring at me. Since we don't see an excess, we are likely to see a market that's just going to creep up, and that's what's expected. So it's expected that we will start moving higher into the 950, the 17,000, and so on and so forth. And as more new highs make the news, more money comes in, and so on and so forth. So the end of the year, however, is special. The end of the year has an end of year rally, a heavier allocation to the winning stocks, which are the Magnificent Seven. They're no longer the Fang Man T. They're called the Magnificent Seven. There are even fewer big stocks out there. And then there's tax harvesting and things like that that occur into the end of the year. I want to remind you that I'm not here next week. I'm going to go visit family up in Canada, and I will not be around. So, but I'm also going to remind you that this Wednesday at 7 p.m. Eastern, we'll have our annual fireside chat. We're going to have Bob Elliott on to talk macro. We'll have Jasper from GexBot talking zero DTE and how that impacts the trade in the futures. And we'll have Jared Tendler coming on and talking about taking stock of this year and setting proper goals for next year. And of course, we'll have the Mavens from Convergent Trading just talking markets. That's on Wednesday at 7 p.m. Eastern until 9. This is an annual event, very popular. A lot of people attend this event. There's no registration necessary. It's open to the public. All you have to do is go to that URL that's pinned to the top of the live chat, YouTube, or point your browser to go to ct.pro/CT-fireside. Go to ct.pro/CT-fireside. And you could just click on set notification on YouTube, and they'll remind you that this event's about to take place. Again, it'll be live streaming. You can chat in the live stream window. There are no restrictions there. So back to business here. So what are we expecting for today? Let's go back to this. Today, very simple. We're opening just on the edge of Friday's range. I'm expecting an open auction in range or slightly out of range. I'm expecting it to dip down and check. Since we're opening above, I expect us to check below, check into Friday's Friday's 77 to 75 area. So 75 right here, 75. And then consolidate, push the overnight high, squeeze towards the 47.91, and then make its way into that 4,800 area. This is what I'm expecting for today. How do you trade that? We'll see. Given that we're opening in balance, I mean, I try to only trade when the market's out of balance. We're opening in balance, so there's probably a lot of watching and not much doing. The secondary scenario is an open auction that just drifts up, squeezes Friday's high, consolidates, comes right back in, and just holds steady, moving the point of control higher, keeping us in balance, and just sitting steady. The third scenario is a test up that fails at the overnight high, poke the overnight high, and then sellers come in and bring us back to 68. Bring us back to 68, and then we consolidate there before we check the 60, and then sit sideways on top of Friday's range. Those are the three scenarios. Let's take a look at the other markets in the big picture. Crude here, you see it's popping and it's coming right back into, remember, crude has two clear distributions in this area. We've been in this lower balance. Remember, we opened in a gap up. The expectation is that we would open on Friday and come back down into at least the upper range of this this high here at 70.25. Did not do that. Today, it gapped through what used to be a low volume node here. So crude looks like it is priming for a move back to the balance up higher at 76.45. So crude's target at 76.45. Unless something changes with the situation there in the Middle East, crude is likely to just climb back up. We've tested balanced at the low end of the range, so we are likely to go back to balance before checking that 80 again. This is the natural progression of an auction. The news may interrupt, fundamental news may interrupt, and so on. But in general, the auction is expected to proceed as shown. Gold has been interesting. Gold reached an excess, a very clear excess in the 2090. That excess is stable and it's very likely to be here for a while. Gold is not expected to breach the 2065 again. I'm expecting gold to just come right back, fill in this weak profile, fill in this gap, and hold steady. So I'm expecting gold in the 2050 to 2000 range. This is where gold square dances for a while. So gold is expected to maintain lower highs, right? So it has quite a bit above it. A push into 2050 is a pretty decent short opportunity, in my opinion. That's not a trade recommendation, but to me, there's a lot overhead, and the expectation is it's likely to flow down towards the 2015 or so. That's gold for you. Good luck. Don't forget to attend Wednesday's show. Clear your schedule, whatever. And I'll catch you there. Be sure to bring your favorite cold or warm drink. And we'll be talking trading on Wednesday night. Good luck.